Cabinet. Linda. Diane.
It's almost afternoon. Good morning. Good morning, Supervisors. Everybody. Diane Webble, I would like to introduce Costa Inois as our price page. He is going to go over the audit and present it, and we'll both be available for questions.
Good morning, Supervisor Kyle, members of the board. My pleasure to be here this morning with you to present the results of the annual audit for the year ended June 30, 2014. I'm managing partner of Price Paging Company. I was on site along with a team of auditors from our office. We were here initially, I think, in May or June for about 4 days doing what we call preliminary audit work regarding internal controls and compliance. And then we were here, I think, in November also with a team of about 4 or 5 auditors doing the county's audit work. Apart from that, certainly we have time that we spend in our office preparing financial statements, making inquiries, obtaining documents, etc. So I'm going to start with the auditor's report on page 1. So this document is, the entire financial statements are 110 pages, so my plan obviously is not to go through all of those pages, but to just highlight. I see. No. Sure, Kyle saying no, don't do that. So page 1 is the independent auditor's report, and it really summarizes the results of the financial statement audit. There is a separate document which I will cover, which is the single audit report. And so the very first paragraph talks about financial statements that are included in the financial statements, which include governmental activities, business type activities, each major fund. And so we are actually issuing several opinions on each one of those opinion units as they are referred to in the accounting literature. Second paragraph talks about management's responsibility for the financial statements. It says that management is responsible for the preparation and fair presentation of the statements. Management is also responsible for internal control. Are we going to try to do it? Oh, okay.
Well, I was just going to try to scroll.
Oh, okay. All right. Sure.
If it's not too distracting.
Nope. I like that. Yeah, let's get to page 1 on the letterhead. So keep scrolling. We're almost there. Right. Yeah. Second paragraph there. Exactly. It's good. So management's responsibility is for the preparation and fair presentation. Also points out that management is responsible for the design, implementation, and maintenance of internal control. And so as the outside external auditors, we are not a part of your internal control system. County is required to establish internal controls that mitigate the risks of both error and fraud. Our responsibility, if we can scroll down a little bit, please. Our responsibility as auditors is to express an opinion on the financial statement. And that opinion basically states whether the financial statements are presented fairly in accordance with generally accepted accounting principles. So the Governmental Accounting Standards Board issues the rules. Our job is to tell you whether you have accounted for things in accordance with those rules. The audit involves performing procedures to obtain audit evidence about account balances, about disclosures, etc. And so we do that by obtaining third-party confirmation, by walking through internal control systems, by reviewing source documents, etc. There's a key part here, though, in this paragraph that says, let's see, in making those risk assessments, the auditor considers internal control relevant to the county's preparation and fair presentation of the financial statements in order to design audit procedures that are appropriate in the circumstances, but not for expressing an opinion on internal control. So we express an opinion on financial statements. We do not express an opinion on your internal control. However, that being said, if we identify a material weakness or a significant deficiency in your internal control system, we're required under the auditing standards to report that to you. So if we can scroll down to the next page, and this is key here, the opinion paragraph. It says, in our opinion, the financial statements referred to above present fairly in all material respects the respective financial position, results of operations, etc. And so that is an unmodified opinion, also known as a clean opinion. That is the highest and best opinion that the county can receive on its financial statements. Basically, it says the financial statements are presented fairly in accordance with the accounting rules. And so that is what I wanted to cover with respect to the opinion. I'm going to very briefly highlight a couple of the financial statements. And so on page 19 is the statement of net position. This is a balance sheet, basically, of the county. So there are three columns: the governmental activities column, page 19, the governmental activities column, the business type column, and then finally that total column. So you can see that most of the county's operations are identified in that governmental activities column. And so again, I said this was a balance sheet. So it lists all of your assets. So you can see there, county cash and investments at $31.7 million, various other assets of the county. And if we scroll down, you'll see the liabilities of the county. And at the bottom of this statement is the net position. So you see total assets of $89 million, liabilities of $7.9 million. And if we scroll down further, this net position, we also call that fund balance or equity, is $81 million. So $81 million being assets minus liabilities to arrive at the net position. Of that net position, you can see that $47 million of that is tied up in your capital assets, infrastructure, and other capital assets of the county. Restricted assets of $27 million, and finally the unrestricted portion of $6.5 million. So this is a balance sheet. I'm going to jump now actually over to pages 24 and 25, which is a balance sheet by each major fund. So I'm not going to cover this in detail, but this is similar to the statement that we just looked at on two different bases of accounting. The one that we just looked at was on what we call the modified accrual basis, included capital assets and long-term debts. This statement does not include those long-term assets or long-term liabilities, but if we look at the general fund, you can see here what the general fund's cash position was, and so on and so forth. If you go across the major funds, if we scroll down, we'll see total assets of the general fund of $10 million, total liabilities of $2.2. Again, this does not include the long-term liabilities that the general fund might be responsible for. And if we keep scrolling down, we'll see the fund balances or deficits, and so a little bit more right there. So assets, again, minus liabilities, giving a total fund balance for the general fund of $10 million, and the unassigned portion being $3.9 million.
Backing up to the liabilities, you identified $1,798,000
Yes.
for unearned revenue. What?
Correct. So when the
That is the PILT.
That came in,
Comes in June and expended in the following year.
yeah, okay.
Correct.
That's the PILT carryover.
Yes.
Yeah. So in any category, the unearned revenue, monies that the county has received, it has not yet earned, so it's reported as a liability until the county has expenditures against it. So I'm going to jump then over to page 28. This is going to be an income statement, so page 28. It's called the Statement of Revenues, Expenditures, Changes in Fund Balance, but it's like an income statement or a profit and loss, if you will. And so this is also by major fund, and so we can see here in the general fund, tax revenues, $9.5 million, license and permit, et cetera, intergovernmental, which is revenues that are received from other governmental agencies. So total revenues in the general fund of almost $18 million. If we scroll down, we will see total expenditures, and this is reported by function. You see that there's not a whole lot of detail there, but this is what is required by the Governmental Accounting Standard Board. So we don't see here salaries, supplies, all those sorts of things, which are natural classifications. We see these in a functional reporting category. And so total expenditures of 8.6, again, revenues of almost 18 million, expenditures of 8.6, for an excess of revenues over expenditures of 8.6 million, I'm sorry, of $9.3 million. If we scroll down a little bit, though, we'll see what happens with that. There are transfers out of 10.4 million. So those are monies that are then transferred to community development or welfare or et cetera, right? So that's money the general fund's made as a tax revenue, but then it transfers to these other funds because those other funds don't generate enough revenue to cover their costs, right? And so that is not abnormal. That is the way that counties operate. And so that's the income statement. I'm not going to go through each of your major funds. I'm going to jump over to the footnotes and just point out a couple of key footnotes. If we go to page 55, this is a capital asset footnote. And this is a table, basically, you'll see there on page 55, that lists, or identifies rather, schedules out all of the capital asset activity of the county. We get it up here, page 55. A couple more pages there. Okay, right here, yeah. So balances as of June 30, 2013, you can see the land that was owned, any additions, retirements, transfers and adjustments, which were adjustments that were made for accounting purposes, and then an ending balance as of June 30, 2014. Total capital assets being depreciated is right in the middle of that. So it started out at $102 million, ended up at $99 million. These are numbers that, this footnote supports the numbers that are in the financial statements. If we scroll down a little bit more here, you see the depreciation and accumulated depreciation against those assets. So total depreciation against the assets of $99 million were $56 million. After you purchased the asset, depreciated over time. And so your total capital assets being depreciated, the net number in that far right column, $43 million plus the land that we talked about, so a total of $47 million. Anyway, I just wanted to point that out. So this is a detail of your capital assets. Another footnote that might be of interest to you, over on page 61 is the footnote regarding the employee retirement system. I talked a little bit last year about the fact that the Governmental Accounting Standards Board has issued a new pronouncement, a new rule that will require, as of June 30, 2015, for all governmental agencies to record their portion, their liability, their share of the PERS liability, right? And so in June 30, 2014, and any previous year, the county has not reported the liability. So you have employees of the county that have pensions, right, retirement benefits. Those retirement benefits, the liability for that is not included in these financial statements. There's simply a footnote here that says, we're a part of PERS. If PERS sends a bill for $3 million, we pay the bill for $3 million. But what is going to be required as of June 30, 2015 is that PERS provide you the information, give you the amount of the liability with respect to county employees, and that liability be reported in these financial statements. So that is going to be a significant change.
Maybe the next note after that, there, though, when you get into the post-employment
Correct.
benefits, that it's going to be doing the same thing for the retirement process we've done with OPEB.
Yeah, so OPEB, other post-employment benefits, healthcare retirees, costs, that also is required to be reported as a liability. That requirement happened a few years ago, but they initially allowed you to record that liability to kind of increase it over time. Now there's a new standard that says we're not going to give you more time, you also need to record the entire liability. In your case, however, you pre-funded that liability, which is a rare thing, but as an accountant, as a CPA, it's nice to see that somebody's being that fiscally responsible.
We've actually overfunded that requirement because we have $244,898 more than is needed, but it's there to take care of future growth.
Absolutely. The actuary prepared a study and said, this is how much you need to put in. You put the money in, but the investment's still a little bit better, so now you're in a position of overfunding. So, yeah, almost $250,000, which shows up there on page 63.
So not only have we funded it, but we've actually
Overfunded it, correct. So,
thank you, Mr. Reason.
It's higher than that now.
Is it that it went up?
These are as of.
these are at the June 14. Yeah. So that's what I wanted to share with respect to the financial statements of the county. There is a separate document with respect to the single audit and the federal grants that the county received. So I'm going to get into that document unless anybody has any specific questions.
I just had one comment. Last year I had a lot of questions, and I want to say that I really grown to appreciate the approach that you've taken. You've actually improved the functionality of the document, and except for that one question that you had already answered, dealing with that $1,700,000, I was really pleased being able to read this and see it. The other thing I wanted to comment on, and I want to thank Diana for getting this to the board early in our year rather than later on. We've had some years where we didn't get the audit until April or May. The target the board set years ago was that we wanted the audit completed by December 31st and theoretically presented to us. We actually had these distributed to us, I think, about a month ago, which was prior to January 1, which I was pleased to see it come through that early. I know the city got their audit not only completed, but it was presented to the city council, I think, the first week in December, so we're not quite up to that level. But I think given the fact that we've had this this to us before the end of January. The significance is we don't have any problems to deal with right now, but if we did have a problem, it gives us time to be able to address that. So I just want to thank Diana and encourage that in the future that we shoot to try to get the audit to us in a timely fashion, which this is, and that's really appreciated.
Okay, any more questions?
I had a question also about PILT, just a curiosity more than anything. Yeah, so the PILT money is appropriated by the federal government in October. We received it the following June. And it's not really identified that I know of for a particular period of time. It's just it's a payment.
It's in the middle of their fiscal year.
It's not attributed like taxes are to a specific date. And I'm just wondering, what methodology do you use to determine that it's accrued the following year rather than the period when it's received? And is that consistent throughout all the counties you deal with?
Yeah, it is, and so there are a couple of different rules with respect to that. Sometimes it has to do with the fiscal year of the government that is providing the resources, so it may not even have to do with your fiscal year. And so there could be a time restriction, or there could be a purpose restriction. So even if the funding does not have a purpose restriction, there may be a time restriction imposed with respect to that funding. And so I think in your case there was a time restriction, which is why it's been reported as not earned in that year. The other thing is that once the decision was made initially, then you don't want to double up and have two payments in the 1 year, and so it is applied consistently.
That was kind of my question. Is that just a decision point that the county made?
The answer,
treatment, or is there another overriding requirement?
The answer to that question is yes, because several years ago, and actually probably goes back to the 90s when we went from the forced reserve payments to getting, first of all, PILT was a relatively small amount of money. We were lucky if Congress gave us 20 cents on the dollar. Now we're getting 120 cents on the dollar. But what we did, kind of similar to what the county schools did when it came to their forest reserve and those funds, instead of trying to budget and spend the money in the year in which it showed up, in this case it would show up in June, we would put that in the budget, the expenditures. We would hope the money would come in that would offset what would be the expenditures. We actually take the money and sit on it for till the next fiscal year, and so we're actually spending money that we already have in the bank rather than money that we think may show up. And I think that was a policy decision that was made by the county years ago, back when Irene was the auditor and Bixby was the administrator. So I think what you're doing is consistent with that.
Right.
Okay, any more questions? Then we'll go on to the single audit report.
Yes, sir. So the single audit report is really an audit that we do with respect to your federal grants. And so page 1 of that report, I'm going to try to open that one as well. So I'll just keep going.
Sure.
Yeah, so page 1 of that report, on our letterhead again, says independent auditor's report on internal control over financial reporting and on compliance and other matters based on audit of financial statements. So government auditing standards requires that when we perform a financial statement audit, requires that we issue this separate report. So earlier I said that we don't do an audit of internal control, but this report says we're reporting on internal control. So there is a difference. We don't issue an opinion. However, this basically says as a part of our audit, we're required to obtain an understanding of the design and the implementation of your internal control systems, your significant internal control systems, over disbursements, over purchasing, over receipts, over property tax revenues, etc. And so we obtain an understanding of those. As we walk through those controls and obtain that understanding, if we identify, again, a significant deficiency or a material weakness, we're required to report that to you. I'm pleased to report that we did not identify any material weaknesses in your internal control system, and we also did not identify any compliance problems as a part of our audit. So certainly we're not attorneys, we're not lawyers, we're not trying to do, it's not legal compliance in that regard, but if we identify a problem, for example, you haven't paid your employment taxes, let's say for 6 months, then we would point that out in this report, but there were no issues. Page 3 is a separate audit report. It says independent auditor's report on compliance, for each major program and on internal control over compliance. So here, we're required to, county has several federal programs, we're required to determine which are the major programs, and they give us the rules, the federal government gives us the rules to determine which are your major programs. Then we're required to test compliance with respect to those programs. And so we have issued, the bottom of page 3 here is our opinion, basically says, in our opinion, the county complied in all material respects with the types of compliance requirements referred to above that have a direct and material effect. So we're not looking at every single minute compliance requirement. The federal government gives us a list, 14 different sections, and within those they give us suggested audit procedures, and so we apply those procedures to make sure, for example, that you're using the money for eligible participants or allowable costs, etc. So that is the audit that we performed and had no significant deficiencies or material weaknesses. If you go over to page 7 very quickly, you'll just see the total of the federal awards that the county received and expended. So if you go to page 7, the total federal award expenditures, excluding loans, $8.3 million. So that's a significant number for you to know. Finally, I'm going to jump over to page 9. Page 9 is a summary of what I've shared with you here this morning. So the type of auditor's report issued was unmodified, again, a clean opinion. Then internal control over financial reporting. There's a question, were material weaknesses identified? No. Significant deficiencies identified? No. Non-compliance, that was material financial statements noted? No. Under federal awards, what I again just shared with you, no material weaknesses, no significant deficiencies. Also issued an unmodified opinion on compliance. No audit findings required to be reported in accordance with the section included there. And then finally, the major programs that were audited are the 4 programs that are listed there. The very bottom that says auditee qualified as a low-risk auditee, and so the answer to that is yes. And that means that in the prior fiscal year, so the year ended June 30, 2013, you had no significant deficiencies or material weaknesses, and you had none for the year ended June 30, 2014. So the federal government now considers you a low-risk auditee, which is a good thing. So that's the presentation that I have. Again, I'm glad to answer any questions.
Any more questions?
I just had one question. This is on page 7, and you talk about the pass-through monies, and you show this is part of that $8.7 million that we received in terms of federal funds, $337,619 in terms of the TDBG grant. What was that? Was there no issues with that particular one?
14.228. We found no issue. We audited that program, the entire $421,000, and so what we do is pull, we obtain a population of all expenditures, and then we pull transactions, disbursements. We reconcile reports that are submitted to the state back to the county's accounting records, and we did not identify any issues with it.
Any more questions? If not, thank you for your presentation. You did an excellent job. Thank you.
Thank you, Chair.
I would move to determine that we accept the audit report and thank the auditor's office for the job done.
Motion and second. Any more discussion? Anybody from the public have anything to say? All in favor, say aye.
Aye.
Opposed, say no. The ayes have it. We'll move on to our 11 o'clock time service. Southern Cascade Community Service District.
Mr. Chairman, members of the board, 11 a.m. time certain is a public hearing. That is a matter, it's a 3rd step in a 3-step process, which started in this boardroom on January 9. January 9? I think it's the 9th. With a resolution of application to LAFCO. The 2nd step in the process was yesterday before the LAFCO Commission. And today's the 3rd step, and that is the calling of the election related to the formation of the Southern Cascades Community Service District for local ambulance and emergency medical response. Also, the calling of an election related to the imposition of a special annual tax on the owners of land within that district if formed. And lastly, the calling of an election as to the initial board of directors, which is also included in the proposed resolution. I'm happy to take any questions, and of course it's a public hearing, so
Public hearing, we'll open the public hearing at 11:37.
thank you.
And
And
we just had the staff report. Is there any questions on the staff report from the board or the public?
I understand there are a number of individuals here from the Big Valley Working Group. Mr. Davis,
We'll get to
most
that.
certainly. So,
But
yes.
right now, it's just question to the staff report. Seeing none, is there any correspondence to that first?
No, sir.
Does anybody wish to speak in behalf of this? No, time to speak if you support it.
I think we spoke quite a bit in the past. Thank you for your support.
Okay, so anybody else wish to
Lincoln
speak?
Davis.
You got it, Dave?
Yes.
Anybody wish to speak in opposition of this ordinance? Seeing none, we'll bring it back to the board for board action. What would you guys want?
I would move approval.
You have a
Second.
motion and second of approval. Any more discussion?
I just want to thank these people for just keeping with it.
Yeah.
I have to
A
say
lot
that
of time and money's been spent on this.
I've had a lot of interaction with Mr. Davis by email and some by phone, and he's always been available, and I've appreciated that interaction. Thank you, sir.
You're welcome.
Okay, Madam Clerk, would you take a roll call vote?
Supervisor Chapman?
Aye.
Supervisor Alba?
Aye.
Supervisor Hinkle?
Aye.
Supervisor Hammond?
Aye.
Supervisor Brown?
All right. Thank you, everybody. Thank you, people, for coming clear down here and for having patience.
The only question we have is, what does time certain mean?
Yeah, well, to answer your question, it means we cannot bring that up before that time, but we can bring it up anytime after that.
You're in our mercy.
Thank you. Okay, where are we here? 11:15. Should we make the end? I'll tell you. Supervisors, Dave Hayes. Thank you for your patience.
Sure, good morning. It's on the agenda just to give an update on a couple projects that are a large part of our program of work for this year. First are the Bald Fire and Eiler Fire salvage and restoration projects. Those are scheduled for decision in June of 2015, and we're on track with that schedule. The official public scoping comment period closed earlier this month, but as you folks know, we accept public comments and comment from the county, for example, up until the time of decision. So if the board continues to have thoughts and considerations, either from the board or from the coordinating council, we're happy to accept those. And just to highlight and review kind of the purposes of those projects, one is to reduce the public safety hazard for folks that are traveling on roads, using our trails, trailheads, and recreation sites from falling trees killed and damaged from the fire. And of course, we want to recover the value of the timber in those fire-killed trees, and that has to happen relatively quickly, essentially next harvest season. And then we want to reduce the fuel load from the fire-killed trees and prepare the site for reforestation and prepare the ecosystem for recovery to a forested one in an accelerated fashion. So we need to take action relatively quickly to make that happen, to get trees in the ground, to control competing vegetation, and of course remove those public safety hazards. So we're on track for a June decision in there. It's probably one of the highest priorities we have right now is to get the planning done so we can make the timber sale shortly after that June decision. So that's all I have on those.
How much are you estimating it's going to be, that sale or the amount that you're going to get, assuming you get through the environmental already?
That's a good question. I didn't bring those figures with me, but it'll be a large part of our program for the year.
What's the estimated dollar value?
I didn't bring that with me. If the board wants it, we have what we call a rapid assessment, which was a kind of a precursor to this, and I can certainly get that to you.
That would be helpful.
Sure. We can all make a note here to share that rapid assessment with you.
Another question, Robert. Of the county, have we made any comments to the salvage restoration projects?
I don't believe we have.
Can we get that on the agenda so we can, please? Yeah. And then a couple other questions I got. I know you talked about in there about compaction and you don't want compacting and everything, but the only thing I know is when I'm on my Forest Service allotment, and you go to these old logging sites, wherever the landings were, that's where you get tree generation comes from, actually on its own. I mean, for whatever reason, everybody's concerned about compaction and everything, but it's just kind of silly sometimes, because that's where a lot of your best tree growth goes. Also in here, you talked about, keeping cattle off. In some of those areas where it burned very highly, you're better off to actually have disturbance to the soil to help regenerate it for